Welcome to the next episode of Doing Insurance Right. My name is Scott Jenkins, your host. I'm a local farmers agent owner here in Phoenix, Arizona. And today I just wanted to go over life insurance and its options for retirement. A lot of people don't think that life insurance actually can be for retirement purposes. In fact, all the perm policies or permanent policies do have a lot of things built in for cash value, which can be used in retirement. But there are ways to actually use your life policy for retirement purposes. Like, for example, did you know that at Farmers, we have a product that offers you an investment that has no risk of loss? It does have a cap on what you can make at 9% per year, but how many people would like the fact that they can make up to 9% and not lose anything? A lot of people would enjoy that investment, as they don't care for risk, but would like to be in the category when it's doing well that they're making money on their money. So that is one big benefit that we have with the Farmers Index Universal Life policy. So it does have a cap rate currently at 9%. So you can make up to 9% per year. It also has what they call a floor of 0, which means obviously you can't lose any money. So that's kind of a great investment to throw at. Also, benefits paid on the backside are tax-free because they are paid with post-tax dollars. So if you're looking for a couple of investments that are not going to be taxable, which is hard to find in itself, and that has no risk of loss, the Farmers Index Universal Life is a great option. Also, did you know that we can use your life option as a retirement? I'll give you an example. With our variable life option, now this one does have where it can lose money, but let's say we have several funds over the past 10 years that have made 10% plus, but let's take 8% for an example. Let's say you're 40 years old, you're looking towards retirement. If we put $1,000 a month in now, maybe we can't afford $1,000, but we'll just use $1,000 as an example. We pay for 25 years till we reach age 65. At 65, we then pay the next 25 years to you at a little over $5,000 per month. So let's cut that in half. If we could do $500 now per month, and we can make $2,500 at retirement, is that worth it? Most people would say, heck yeah, I'd love a check at retirement for $2,500 on top of if there's Social Security around. If there's anything like that, that way they have a stipend to live off of during their retirement years and are not forced to work and have a part-time job. So that's just another one of the great things that we can add to your retirement portfolio. Yes, 401k is nice. It's a great option because of pre-tax dollars, and typically it's taken right out of the check. So it's a savings you don't miss for most of the time. Here's the problem with the 401k. It has age restrictions. If we have different jobs over the next 25 years, 30 years, 40 years, 50 years, which most of us will have several, then obviously we're going to have to roll those over at some point. And also 401ks have a lot of risk as well because they can be in riskier investments. Let's say an IRA, a lot of people talk about IRAs. Here's the thing with IRAs. They do have an age limit. You have to wait till 59 and a half. They also have a contribution limit as well at $6,500. So let's say I wanted to put $10,000. Well, only $6,500 allowed in the IRA annually. So what am I going to do with that additional $3,500? Also, the IRAs have a cap on how much income you can actually make in order to contribute to those. So, and then also the payout on the IRA, we have to wait till 59 and a half before we don't get taxed on the dollars that we were already taxed on. So another tricky thing with the IRAs. Overall, I'm not saying life insurance is the only investment you should have for your retirement, but it is a great add or a mainstay in your retirement portfolio. So it's a great option and opportunity with all the different products that we have. Not only do they provide investment opportunity, but here's one thing that the others don't do. So let's say I don't have $500,000 already in this account to maybe act like life insurance, but we also have a death benefit. So during that time, we're putting $1,000 a month in And we'll take, for example, when we were getting $5,000 back in retirement, roughly our death benefit around the same time is close to $1 million. So at $1 million, would that take care of the family? In most cases, yes, not in every case. That's why we need to sit down, take a look at what your worth is, what the lifestyle is, how much it would take to replace the income that you currently have. And not only that, put together an investment strategy that's going to make sense for you and your family. I wanted to thank you for listening to me on this episode of Doing Insurance Right. As always, if you could rate, review, or subscribe to whatever fantastic platform you're listening on, whether it be Apple, Google, Spotify, or any of the other great platforms out there, I'd greatly appreciate it. And I look forward to seeing you on the next episode.